We're watching the yen very closely. 160.31 is the current level, but it did weaken to its lowest level since 1986. That'd be 160.38. Joining us now is Peter Bookvar, Bleakley Advisory Group CIO and CNBC contributor. Peter, great to have you with us. The BOJ will meet next month, I should say, at the end of July. They've got to be hawkish. What do you think happens?
I think they're laying the groundwork for not only a rate increase of maybe 10, 15 basis points, not as much as 25, and also trimming back on their QE. Still doing QE, but doing less of it. There's an extraordinary amount of pressure now on the Bank of Japan from not only the Japanese citizenry, from that is dealing with higher inflation and now a decrease in the purchasing power of the yen, but also the Ministry of Finance that doesn't want to have to deal with FX intervention because they know that usually fails. The question, though, is that even after those moves, is that going to be enough to stem this yen weakness? Because there's still a mile wide between U.S. policy rates and what will be in Japan.
1 month is a long time to watch this currency slide, Peter. Do you think they try and step in? I mean, traders it's been sort of the whisper for the past month or so that the BOJ would eventually have to step in. Or do you think that this slide is orderly enough that the BOJ would not?
Well, they've done it twice already over the past couple of months, and the impact was maybe a couple of days. Mm-hmm. And we're seeing now, obviously, the retest with 160 proving that those two times have failed. The only way to get a sustainable slowdown, at least in the depreciation of the yen, or maybe even get a rally, is actual action by the BOJ. So I'm not sure if they're going to intervene before that BOJ meeting and sort of front run it, but maybe in order to give any yen rally triggered by that meeting some momentum, maybe they intervene after that meeting, but in the meantime having to wait for further weakness.
Oh, interesting. The flip side, literally, to this whole yen weakness is the strength in the U.S. dollar, Peter, and the strength in the U.S. dollar is being seen, across crosses against every major currency in the world. And so how do you think that manifests during earnings season, which is literally right around the corner? Are we going to hear more commentary? Is it going to be more of a quote-unquote thing during the season?
Well, it will be for some. I mean, many multinationals try to hedge, but it's impossible to really fully do that. In the last couple of quarters, we did see, like Coca-Cola and Microsoft and some of the big names that do business everywhere, that a few hundred basis points of revenue growth was clipped by the rally in the dollar. So you could see a repeat of that. But I think overall, the dollar strength isn't enough to really move the needle earnings-wise. I mean, even take the euro, for example. It's been trading seemingly in a 105 to 115 range for years now, and it remains in that range. And I think the dollar overall is in a long-term trading range outside of the outliers like the yen.
All right, Peter, got to let you go. Thanks so much for your thoughts this morning. Peter Bookvar of Bleakley.